Maybe you're new to the world of Forex, or maybe new to the world of stocks, or you've been trading stocks for a while, never even heard about Forex like I was at one point in time, and you're probably wondering, okay, what is the difference between the two? What we're gonna do is we're gonna break down everything you need to know as far as the advantages and disadvantages of both, and we're starting right now. Welcome again to fxpronow.com. My name is Philip Anglade, and our goal is to be able to help you to become a safe yet profitable trader. Maybe you're new to the world of Forex and you're looking for a good platform that you can be able to learn everything you need to know as far as the basics of Forex. Well, what I've done is actually created a whole lineup of videos that could be able to help you. So make sure that you click on the subscribe button and then on the bell that's right next to it so you can never miss out on any other details that we're doing. Now, let's just say that you've been in the Forex markets for a while and you're looking for a good backbone that you can be able to lean on as far as matching up your trades with what somebody else is doing. Well, every single Monday through Wednesday at 10 p.m. Eastern Standard Time, you're able to actually see what we're doing when it comes to the Forex markets. So make sure that you're always tuning in and you're always checking up to see if there's something available with us. So going straight into the topic of our video, what's the difference between stocks and Forex? So first, what we're going to do is we're going to break down what stocks are, how they're traded, the advantages and the disadvantages as well. Then after that, what we're going to do is we're going to do the same exact thing for Forex, and then we're going to do a comparison between the two. So make sure you watch the entire video so you can be able to catch everything that there is to know when it comes to the differences between stocks and Forex. Now, before I get this started, I'm going to do everything on a fair comparison with not a lot of bias for myself. Everything is going to be based upon your beliefs after this video is done, and you can be able to make your own decisions. So first, simply, what are stocks? So let's say we have an example of somebody that's looking to be able to create a company, but they are in need of assets. They're in need to raise capital. Well, what they'll do is they'll sometimes what we call go public. And what they'll do is they'll go out into the marketplace and they'll see, is there anybody that wants to actually buy into their company? So let's say this company is in need of $1 million. Now, that person or that group of people, they'll put up, let's say, 100,000 of their own dollars. And let's just say that there's a group of people, let's say, for example, 9 people that also want to put up $100,000 as well. Well, that's $1 million that went into a pool, and everybody split it 10 ways or 10%. So what that company will do is go ahead and actually give that investor a certificate or a stock of the company saying that they own 10% of the company's shares. So the company is right now worth $1 million. Now, the only way for that investor to go ahead and actually make money is if the value of the company goes up and they go ahead and actually sell their share of the company to somebody else. So let's just say after 5 years, the company goes up to $3 million in worth, then the person that invested in that company owns 10% still. So 10% of that 3 million is now 300,000. So now what they'll have to do is see if they can be able to find somebody else that wants to buy those shares for $300,000, or what we call liquidate the money. Now, this was just an example, and here's the thing. Most people don't have $100,000 to put into any investment, period. And even if it did take 5 years, that's still a long time. Now, again, this is just an example where I said there's only 10 people that are in this particular company. But most companies, when they go public, they're actually releasing millions of shares to the public. And those shares are usually worth, on an average, $70 per share. So let's say we took the same exact example and we said those $70 that you paid per share went up 3 times. That's great, but it took 5 years to do that. 5 years to make $140 per share. That's a whopping $28 per year per share. So per month, that's only $2.33 per month. Congratulations. So let's just say that you bought $1,000 worth of those shares. That's actually only 14 shares that you bought. And when you multiply those earnings, that's about $392 per year, or about $32.67 per month. Again. Now let's go into the Forex market. Like we covered in the video, What is Forex, where we go a little bit more in depth on what Forex is. Forex refers to the FX or foreign exchange markets. Simply put, a place that you can be able to exchange currencies around the world. All you're doing when you're trading Forex is buying one currency and selling another in exchange for it. Anytime that you buy and sell a currency, you're actually doing it at the same time. You're buying one and selling one at the same time. So that's why they're listed as pairs. For example, the euro, which is the European currency, being traded against the US dollar, which is the United States currency, the way that that is listed is the euro versus the USD, or EUR USD, or what we call in short EU. Another example could be the Great British Pound against the Japanese yen, or GBP JPY, or in short, what we call GJ. Many things like economics and global politics are what move the price or the value of these currencies up or down. Looking at past trends of these currency pairs can be able to most times predict what will happen in the future. So let's just say we have a real world example. Let's say we have a mall being built, we have a hospital being built, and also some schools built in one area. And then we look around and we see there's a house there. And we see that there's a trend where the market in that area seems to be going up. And we see that house right there and we're like, this house costs $100,000, let's just say. So let's say you buy that house for $100,000, right? So you went from $100,000 to one house. So you can call it USD house. The same way that we do GBP, JPY, USD house. So now you can be able to call this a pair. So let's just say that that mall, the school, and the hospital are now complete and it's around that house. What do you think is going to happen to the value of that house? Wouldn't you agree that it's going to go up in value? So what does that mean? Well, the house now went up in value in relation to the USD. And let's just say that house went up to $150,000. And there's somebody that's willing to be able to pay that $150,000. And mind you, let's just say this happens within a week or even one day, that somebody's willing to go ahead and actually purchase that house for $150,000. So when you go ahead and actually sell that house for $150,000, you only paid $100,000. So that's a difference of $50,000. And all you did was convert it back to USD. Now, you didn't do anything too crazy. All you saw was the fact that there was a trend going on in a particular market. You bought something seeing the fact that it was going to go up in value, and then you sold it when it was at that higher value. Now you have more money. And this can take days or even hours to happen, right? Well, what's cool is this is how the Forex market works. And the thing is, you don't need a lot of money to go ahead and actually make a good amount of money, because in Forex, you can be able to use what we call leverage. And the simplest way I can be able to break down leverage is, let's just say you have a broker that's allowing you to go 1 to 100 on your leverage. That means for every dollar that you have, they see it in the broker as $100. So let's just say that same $1,000 that you would have put into a stock, the broker that you had with Forex now sees that $1,000 as $100,000. That is crazy. And there's some brokers that allow you to go even higher in leverage as well. Now, obviously, the higher you go in leverage, the more risk you have to your account. And the beauty is the fact that you can be able to make profits within hours, not years. See, the thing is, you didn't do anything. All you saw was the fact that there was a certain area that may go up in value because you saw a trend of certain things that were happening in that market, and all you did was buy when you saw an opportunity before the trend continued, and then you sold when you saw the value of that certain market or that certain thing that you bought was higher. That's it. Well, it's the same thing when it comes to the Forex markets. Let's just say that you see that there's a trend of the euro going up in value against the US dollar. Well, if you buy euros against USD or click buy on euro USD, if euro USD goes up in value, well, you just made money. That's as simple as it goes. Also, on the other side, let's just say that you see the euro is losing strength against the US dollar. Now you can be able to just click sell, and then from there, if the price goes down in value, then you can be able to just get out of that order, and then you just made money. That's as simple as it goes. All one would need to do is just know the trend of the markets, and that's exactly what the You Are the Indicator course that you'll be getting started with will do. What we do is we teach you step by step exactly how to go ahead and actually read the trends of the markets and be able to take advantage at any point in time. See, the thing is, by understanding trends and knowing how to read them, I see this gives you power, because the thing is, you're going to be able to use this skill forever. It's never going to go away. It's something that you can be able to pass on from generation to generation. Having full control of your financial freedom and not hoping that a company is going to go up and be profitable. So now tell me, with those examples that you just received just now, which one would you choose? Go ahead and put it in the comment section below. I want to know what your thoughts are on those two comparisons. So now what I'm going to do is I'm going to do a side-by-side comparison between the two. And then at the end, I want to know again what your decision is. So first, what I'm going to do is I'm going to show you how big these two players are. So first, I'm going to go over stocks. Stocks actually comprise of about $200 billion worth of trading on a daily basis. Now, when it comes to Forex, Forex is actually the largest market in the world, and there's no comparison to it. Trading about $5 trillion a day. So this gives a lot of opportunities in the Forex markets. What I want to do is I want to give you a visual comparison between a billion and a trillion. So let's just say that I had a stack of $1,000 and I had that stack of $1,000 next to something. 1 billion would go to the height of the Statue of Liberty, or about 358 feet. Pretty impressive. Now let's just say that we had the same exact stack of $1,000 and then it grew to $1 trillion in height. What would that be? Well, it'd actually be 67.9 miles high. That's further than the clouds, it's further than the atmosphere, it's actually into space. So obviously there's a huge difference there. So who would you give that win to? So let's talk about the times that you're able to actually trade. First, let's talk about stocks. When it comes to stocks, you're only usually able to trade the stocks that are in your particular country. So let's just say that you're in the United States, you'll be trading the New York Stock Exchange or the NASDAQ. And when it comes to the New York Stock Exchange, it's only open from 9:30 a.m. to 4 p.m. So most times you'll probably be at work at that point in time. Now, when it comes to Forex, you're able to actually trade 24/5. So the way that that works, depending on where you are in the world, let's say that you're in the East Coast of the United States, it's actually from Sunday at 5 p.m. Eastern to Friday at 5 p.m. Eastern. So as you can see, it's 24 hours a day from Sunday to Friday. And with that being the case, let's just say that you work during the day and you're not able to actually be on the charts during the stock market. Well, you could be able to be on the charts on the Forex market at any point in time. So again, who would you give that win to? Now, what are you able to trade? When it comes to stocks, again, you're usually only able to trade the stocks that are in your particular country. So let's just say that you want to trade something else in another country. It takes a lot of work for you to be able to find a broker that will allow you to actually trade something in their country. So when it comes to Forex, you can trade almost every currency that there is all around the world as simply as clicking a button. So now let's just talk about plain and simply the difficulty between the two. Here's the thing, when it comes to stocks, there's literally thousands upon thousands of stocks that you can be able to choose from. For example, the S&P 500 or the Standard & Poor 500 are the top 500 companies in the United States. And that's just a small index. And again, that's just one index. So this may be difficult because the thing is there's so many different stocks that are out there. And the thing is what you have to do is literally break down each company by company to see if they're gonna go up in value. Now, if you're willing to be able to go through that research and see exactly which company is gonna go up in value, that's great. If you have the time and you have the know-how to go ahead and actually analyze each company as far as their balance sheets, as far as if they're profitable, and a whole bunch of other different factors, then great. Price stocks is for you. This is what we call fundamentals. Now, when it comes to the Forex market is only really comprised of about 10 major pairs. There are a couple other crosses and stuff like that, but they're nothing really major. Most likely you're only gonna focus on probably about anywhere from 1 to about 5 at the most. So with this being the case, you're not really going to be spending a lot of times looking at these pairs to see if there's anything available. So it makes this very, very simple because the thing is you're not going to have to do any research when it comes to looking at these pairs to see if there's a trend forming. It literally just takes you looking at the charts and understanding what trends are and how they form and how they continue. And that's what you're going to learn in the You Are the Indicator course either way. So I see this as very, very simple. When it comes to our trading style, we do what we call technical analysis. And when it comes to technical analysis, all we're doing is looking at trends. We're not doing any research. We're not seeing if a pair is going to go up or down when it comes to the news. We're strictly going based upon past evidence to see what the future price may hold. Making Forex very, very simple in my opinion. But I want to know what your opinion is. Now, also when it comes to the difference, most times when you're looking at stocks, you're really looking at if the value of a company is going to actually go up. Now, for most companies, this takes a good amount of time. Sometimes a really, really, really long time. So the thing is, let's say that you buy that stock, your money is tied up into that stock. And the only way that you can be able to make money is if you go ahead and actually sell that stock and miss out any future profits that will happen in the next couple months or years. See, when it comes to the Forex market, you're mostly looking to be able to get in and out on a daily basis or even on an hourly basis. There are some times that you go ahead and actually swing the market, and these swings could take days, weeks, or even months. But the way that we teach are how you can be able to actually make money within this hour, this day, or within this week. We don't really swing the market as of yet. So what this is going to do is this is going to allow you to actually supplement the income that you're making from work. Just imagine an extra $300 to $500 coming in per week. How could that be able to help you out? As opposed to waiting months when it comes to the stock market and having to wait a year, 2 to 5 just to be able to make an extra $1,000. The cool thing about Forex is it's day to day and you can be able to pull out your money at any point in time. So you tell me, which one do you think? So next, what is the amount of money that you need to be able to trade stocks or Forex? So when it comes to stocks, most brokers limit you to a couple $1,000s before you can be able to actually enter into that broker. I remember when I first got into my first broker, I needed about $2,000 before I could be able to start. See, when it comes to the Forex world, you can literally start with less than $1,000 and you can be able to actually open up your broker and be able to trade within this hour. The average price for a stock is about $67 per stock. So if you buy one share at $67 and the price goes up to, let's just say, $68, you made it a whopping $1. Congratulations. But because of leverage when it comes to Forex, let's just say that you have $1,000 in your account, but you have a leverage of 1 to 100, your broker sees it as $100,000 in your account. So let's just say that you get into a trade on, let's just say, EUR-USD, and you bought EUR-USD at $1.14. Let's say the price goes to $1.15 and you actually entered in what we call a standard lot size or one lot, you actually would have made $1,000. And for the price to be able to go from $1.14 to $1.15, this could be able to happen within hours. This is the beauty of Forex and the beauty of leverage. This is actually what happened to me on my second day trading and I was hooked. $1,000 within my first 48 hours trading. Crazy. So now I'm going to leave you off with just a couple of opinions. See, the thing is, when it comes to stocks, CEOs and executives for these companies are going to do whatever it takes to be able to make their stock price go up, right? So if that's the case, wouldn't you agree there may be some companies that will do some things that may not be as ethical as possible to make their value of the company go up, right? So with that being the case, I see that there could be a slight manipulation when it comes to the price. So let's just say you buy a certain stock at a certain price and then it goes up in value, but then whatever they did actually comes out into the light and then it drops dramatically. You have no control over that. Also, for example, let's just say like a company like Tesla. Let's say that you buy a Tesla share and then the value of the company goes up, but then they go onto the news and they show a Tesla crashing and then the company goes down, let's say 10% that day, you could be able to lose a lot of your money. So I just see that as a lot of risk and it just moves too quickly. But when it comes to the Forex market, it doesn't move as much. And if you think about it, what we're talking about are currencies of countries. So it would be kind of difficult for an entire country to go ahead and manipulate their currency that quickly that could be able to actually affect you as a trader. So you go ahead and actually compare that for yourself. See, the thing is, I don't want you to think that I'm just hounding on stocks or anything like that. To tell you the truth, I was actually trading stocks for 5 years of my life when I was actually in college. And the thing is, the reason why I was trading stocks is because I didn't know about Forex, to tell you the truth. Every single year, I would actually make over 100% when it came to my stocks because I was actually doing that research and I was buying into companies that I knew would go up in value. To tell you the truth, 100% of my money on an every year basis is a good amount of money compared to the S&P 500 that has only gone up 11% last year. So if I went up 100% and the S&P 500, which is a large company, has only gone up 11%, I think I could be able to have some type of play in the market. But once I actually found about Forex and I see this thing called leverage and I can be able to just track the market, I saw a simple way that an everyday person could be able to learn how to read trends and be able to get into the market and be able to make a bunch of money. See, the thing is, I was able to actually make within a 48-hour period $1,400, and the thing is, I hardly even knew what I was doing. But now that I've actually gone ahead and actually learned how to go ahead and read these trends, now things are completely different. So now what I want you to do is I want you to go ahead and really break this down, and I want you to be able to make your decision for yourself. We have a good amount of content on fxpronow.com. What I want you to do is go ahead and actually go through our basic videos. It's completely for free. Go ahead and actually go into fxpronow.com, create an account so that you can be able to actually watch all of our basic videos. And when you're ready, go ahead and actually check out our You Are the Indicator course. Check out some stories from people that have gone ahead and actually taken the course, and go ahead and look at the leaderboard so you can be able to see all the people that have made over $1,000 in a day just like I did because they've taken the actual You Are the Indicator course. So make sure you watch the next video in our basics section, and like I always say, pay attention, stay excited, never stop learning. Let's become an FX Pro now together. And always remember, you are the indicator.